Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Amazon Web Services CEO Adam Selipsky is stepping down from the job. Details to come.
Plus, OpenAI unveils its updated AI models as Google kicks off its AI event today. Full coverage ahead.
And we sit down with the CEO of the buy now, pay later firm Klarna as the company eyes that long-awaited IPO. But first, let's check in on what's already trading on these public markets. And maybe a little bit of a reprieve in some animal spirits, even though we see that PPI number, that producer price index coming in hotter than anticipated, but you get more granular. And maybe there's sign of cooling in some of the key areas that the Fed will be focusing on from inflationary pressures here in the US. We're managing to pull up some 0.4% on the NASDAQ. And notably, even though we saw an initial knee-jerk sell-off, we're back to rallying on the bond market, particularly at the 2-year yield. I'm also shining light on what's happening on those highly shorted names. Basically, what's happening with the likes of GameStop, AMC, another extraordinary rally, no fundamental reason, but we go long the particularly high short interest stocks, those that are widely bet against by the broader market. We're up 7% on that particular index. Move on, have a look at what's happening on the world of Bitcoin. Actually, no move across or read across from the meme frenzy to the crypto frenzy. Today, Bitcoin just selling off a little bit. In fact, we've heard from some key players within the crypto sphere. I'm thinking of Mike Novogratz saying, actually, look, we're going to be range bound from 55 to 75,000. We're currently at 62,000, let's call it today, Ed. What are you watching on the micro?
There is a lot of technology to fit in today's show. Let's go to China and the US-listed shares of Alibaba and Tencent. Alibaba, the story is low single-digit growth in e-commerce and cloud. There's fighting talk about AI and fighting talk about the spending power of the Chinese consumer, but those US-listed shares are lower. Compare, contrast with Tencent. They're seeing a lot of ad growth, particularly in video, and WeChat is seeing a really big surge in usage hour. Later in the program, we'll go to team coverage on those two key China names. And you mentioned it, Google I.O. later today. Alphabet will show its hand, we think, on its next offerings in artificial intelligence. Let's get to our top story, and that is Amazon and Amazon Web Services, or AWS, the cloud unit of Amazon. The company announcing that Adam Selipsky is stepping down as CEO of AWS effective June 3rd. Matt Garman, who started as an intern at Amazon in 2005, was one of the early product leaders in AWS, will take over as the CEO. The shares are off session lows, but still down around 0.8% in this Tuesday session. And the market asking questions, well, is this bad for Amazon's cash cow? And who on earth is Matt Garman? Let's get out to Seattle. Bloomberg's Matt Day joins us, and let's start with the news at hand. Why is Adam Selipsky stepping down as CEO? And should we be worried, I suppose, about the health of AWS?
I sure to listen to Amazon CEO Andy Jassy tell it. No, we shouldn't be worried. He said when he recruited Adam Selipsky, who was his right hand in building the AWS business, back to Amazon in 2021, they'd had a conversation, said, listen, give me a few years and get the next generation of leaders in shape, and then we'll talk later. Andy Jassy said Adam Selipsky is considering other challenges. We don't know what those might be. Nobody detailed that in their emails to staff today. We just know that he is out as of next month.
Some well-earned rest with family, it seems to insinuate, before he launches onto his next challenge. Remember, he was CEO of Tableau for an interim basis in his long career with Amazon. I'm interested, therefore, on who Matt Garman is. As we know, like, what, an MBA intern turns now one of the key executives.
That's right. So Matt Garman, he's a lifer at Amazon, joined in 2005 as an intern, 2006 as a full-timer, and led some of their initial services, helped set pricing, the first names for the products AWS put on the market. And since then, he's spent most of his time as an engineering leader. He was leading one of Amazon's most important divisions, the sort of computing power for rent group. And then back in 2020, he found himself running sales and marketing. And to a lot of AWS insiders, that really looked like he was getting set up to succeed Andy Jassy, the division's founding CEO. It turns out Andy brought back Adam Selipsky instead, but this isn't a surprise to anybody who's been following either Matt Garman's trajectory or AWS's.
the market was a bit worried. There was a knee-jerk reaction, if you call a percentage point decline a knee-jerk reaction, Matt. And I guess the idea is what happens next for AWS, because Adam Zlipsky left that still accounting for the majority of operating income for the entirety of Amazon. And the new figure they're giving us is this run rate of $100 billion of revenue. Sum up where AWS sits today.
So AWS is the biggest cloud computing company, but that said, they've had a bunch of pressure put on them in the last year coming out of the pandemic. A lot of their biggest corporate customers were looking to cut costs. That dropped AWS's growth down to record lows. They've bumped up beyond that, which the market seems to like well enough. Market likes even more, though, that they have said that artificial intelligence revenue is starting to materialize. Last month, they said AWS is on pace for a couple $2 billion business over the course of a year, which, that's not a particularly detailed number, but for a really, really hot corner of technology, it's a sign that Amazon is gaining momentum after really getting kind of beaten out of the gate in terms of generative AI services in the last couple of years. So, AWS, still Amazon's cash cow, still accounts for, the vast majority of their operating profit quarter to quarter. But that said, its business has been under pressure for the last couple of years, certainly.
And Matt, is it fair to characterize as it being beaten out the gate? Or is it that it just didn't use generative AI in its lexicon quickly enough? From your perspective, when we're anticipating what Google's about to unveil for today?
I think it's certainly a little bit of both. Amazon's been working on machine learning and AI services for years and years, as they will tell you. If you go back a couple of years to when OpenAI releases, the ChatGPT that shocks the world, Amazon wasn't really even talking in the same lexicon at that point. Generative AI wasn't in the conversation. And then when it came to embedding, generative AI products into services already on the market, Microsoft got there real quick, Google got there real quick. Amazon, caught up and is working to catch up further, I guess. But, I think it's pretty safe to say that at least at the outset, they were a couple of steps behind.
Matt Day, on all things Matt Garman, on all things AWS, we thank you so much. We've got to talk about Klarna, the buy now, pay later firm that, well, as we all know, is eyeing an IPO. And we're wondering at what particular point they're going to do that. Is it the first quarter of next year? That's according to reports right now. This comes on the heels of what's been a busy year for IPO offerings and also a busy year for integrating generative AI, which this company is doing. I'm pleased to say that Sebastian Siemiatkowski is with us. He's a Klarna CEO. And I want to start on what all investors are so interested in is the fact that you are eyeing the public markets. We're hearing as soon as Q1. How much more T's crossing, I's dotting you having to be doing at the moment?
I've heard that rumor as well.
Is it correct?
It's an interesting rumor. But I think for us, it's always been really critical. We wanted to establish ourselves as a global business. That meant success in the US, meant both in awareness and in profitability. And now with almost 40 million users in the US and it being a profitable and actually our largest market by revenue, those kind of criteria has been met. So we're definitely ready.
You've been doing interesting partnerships with Uber. You've been launching a waitlist for a credit card. We'll get into those products in a moment. But when you say it's an interesting rumor, could you go earlier than Q1?
Everything's possible.
Okay. Ed.
Sebastian, good morning to you. Let's think about then where you might list in the context of your business. You've grown 32% in this country over the last year. Why is that? Why are you seeing strength in the US market?
Well, I think that what's interesting actually, it comes back to an interesting McKinsey study from 2015, and it showed that in this market, there is a growing number of consumers that are very tired of the credit cards and how credit cards work. There's a great Netflix documentary called Credit Cards Explained. You will see all the bad practices that banks have accumulated over the years to push people into debt, to revolve, to build up as big balances as possible. And these group is self-aware avoiders, people that are looking for simple credit products, zero interest, fixed installment. They're about 20% of the US population. And Buy Now, Pay Later speaks directly to this audience. And I think that is the most important explanation for the success in the US.
Sebastian, later in the program, we're going to talk a lot about Alibaba's earnings. And I know that China's not something that's top of mind for you, but bear with me. They talked about the consumer in China having a lot of cash, a lot of savings, but sentimentally, they're not prepared to spend. It's a really psychological market. Now, compare and contrast that with the United States. A lot of people I hear from are talking about credit card use and credit card levels, but psychologically, the US consumer seems prepared to spend. What do you make of all that? What do you see through your platform?
Exactly that, right? I was actually a little bit worried around Christmas when I saw the Christmas sales. I felt that Christmas sales this year was a little bit discount driven, and I wasn't clear to how much was merchants kind of trying to offload stock through discount and how much was consumer strength, so to speak. But I think now, with a few more months in the bag, you see that like consumer spending in the US is holding up quite well, and there is that demand. So we're seeing that across all categories that we cover. And as much as we're associated with kind of fashion and so forth, like with being live with Uber, with Airbnb, with a lot of other big American brands, we can see that across the board.
What's so interesting is you have been building up a focus here in the US, and you have got this wait list for a credit card, but you're meant to be the anti-credit card company, I thought. This whole idea that there's spiraling debt that mounts there. How are you doing it differently? Why do that differently?
Well, I think that like the interesting thing is that to me the card is just a delivery mechanism. It allows our consumers to use Klarna everywhere as opposed to only the places where merchants have integrated us. And even if we cover 40 of the top 100 US retailers online today, we still want to make it available everywhere, right? But I think the key difference versus the credit card is how you use it. Now, when I used to work at Burger King back in the days, when you would swipe a card, you would press 1 for debit and 2 for credit.
Yeah.
Because it made a lot of sense that you didn't use credit for every purchase. But the banks abandoned that because they wanted you to build up your monthly statement to be as big as possible, to put everything on it so it increases the likelihood of you lending and borrowing money and kind of increasing the revolving, right? Like you have to remember a credit card balance is usually $5,500 on average. With Klarna, it's $150. So to us, the ability to always have the option between debit and credit is fundamental. That's one of the key things that will provide a healthier, responsible usage of credit. And in addition to that, having zero interest and fixed installments. So those are the primary concepts. And we can bring them through a card. We can bring them through offering them directly on the merchant website or in the store.
At its heart, you're doing things differently by being tech-driven. A lot of credit card companies are now pretty tech-driven as well. I want to focus in on the generative AI side because you caught a lot of headlines by the fact that you said, look, now generative AI within our customer services is doing the job of 700 people. Is it still 700? Is it more than that?
It's probably slightly more by now. I think the reason we knew that number would kind of catch the attention, but it's partially because I feel there's a lot of buzz around AI, and there is a lot of things, demos being announced, and you were talking about Google today announcing something, but there are a few things that are practically there, and a lot of business leaders are asking themselves like, where's the actual implications on my business? And this was the first time we at least felt like, look, here's a practical application that isn't like just a small, it's real life. Consumers prefer it because it's actually higher customer satisfaction than the human agent. It's faster to use, it's higher quality, and it's having profound impact. But we also believe that society and politicians needs to recognize that this is not something that's going to change in 10 years. The implications for society are going to come in the coming years, and it's time to think a little bit proactively about what measures could be taken as a consequence.
Sebastian, exactly 1 month ago, we had the European Commissioner for Financial Services, McGuinness, visit us here in San Francisco, and we talked about fintech regulation, essentially. You operate in both markets. Which do you find to be more friendly of the regulators between the United States and Europe?
Well, I think amazingly the EU introduced some legislation back in 2004-05 that meant that we, who are a fully regulated bank in Sweden, can passport that license across all European states. And that is a tremendous advantage. And to some degree, it's actually easier even to operate across all of the US states, where there's bigger differences on consumer credit lending in different US states than there is among the European nations to some degree. So it's actually, I would say, fairly even, a little bit sometimes advantageous to be in Europe. But we definitely think that there is more competition, openness, and willingness to promote competition in the American society than in the European Union. And so I think that's very favorable in the in American context.
Sebastian, when you do go public, investors will be very focused on profit. Could you speak a little bit about your profit?
Of course. No, I think, look, from my perspective, I hope we will be able to deliver some very interesting perspectives when we are ready for that, because we are seeing a very strong growth currently within Klarna. We are definitely above $2 billion of revenue. We're seeing very high volume growth. At the same point of time, due to the implications of AI, since September, October, we have stopped recruitment. And in our case, with normal attrition rates that most tech companies have, where people stay about 5 years, this means that we are actually shrinking in number of employees by about 20% per year. So we hope that by the time we kind of get to that perspective, we're going to be able to present something that looks like revenue growth while costs actually diminishing at the same point of time.
Sebastian, it's been great having some time with you. Thank you for coming on. And like how you've been navigating some of the timing questions with us. Sebastian Siemiatkowski, he's the Klarna CEO. And what we've got coming up, more on AI, I think.
Yeah, more on AI. I really enjoyed that, by the way. OpenAI unveils its updated chat model as Google kicks off its AI event today. We've got really important discussions coming up next. Stick with us. This is Bloomberg Technology.
OpenAI, well, it's launching faster, cheaper versions of the AI model that underpins its chatbot, ChatGPT. And it's as the startup works to hold on to its seeming lead in an increasingly crowded market. Joining us now on the announcements made yesterday, Bloomberg's Rachel Metz. And we heard in particular from the key executives, from Marathi as well, really outlining, well, that me as an unpaying user is going to get a whole load more for free.
Yeah, I mean, that's a big part of what they were announcing is that they are giving people a lot of capabilities that until now had been reserved just for paying users of GPT-4. But also overall, they're saying the model is faster and more efficient at this point. And there are also some additional interesting things that they rolled out as well, such as some audio capabilities that are much faster than what we've seen before. They already had the ability to talk to ChatGPT via the app. I believe that was just for paid users in the past. But now you can use that in a much more real-time way, and it also is much more capable than it appeared to be in the past. That'll be rolling out in the coming weeks, I believe.
Rachel, let's zero in on the underlying model, GPT-4o. Is that right? GPT-4o. I got it?
Yes,
all right, look at this chart.
Yeah.
So this is its performance against benchmarks, right, which everyone does when they release a new model. But I guess the main thing that OpenAI was talking about is that this has dramatically reduced latency in text, image, and video use cases. Get nitty-gritty and nerdy for us.
So, I mean, really, this should just make all kinds of things faster that people want to do with the model, make it faster to have a back and forth with it. It could make it could make it feel more lifelike if you're talking to it and it's talking back to you. Analyzing pictures. I mean, what they were showing, this demo that you've got on the screen, is showing an open camera view rather than right now, if you're using the ChatGPT app, you have to take a picture. And in the future, they said they will be adding the ability to analyze videos as well, not just still images. So they're trying to bigger, better, faster, more with this model. And some of it, I guess we're just going to have to wait and see how well it works.
Bloomberg's Rachel Metz, terrific reporting. Great to have you on the program. There is one thing that OpenAI did not do or reveal, which was search. And the Google I/O conference is kicking off in Mountain View. Let's hear about how Alphabet CEO Sundar Pichai characterized his competition with the CEO of Microsoft. Just listen to this.
I think one of the ways you can do the wrong thing is by listening to noise out there and playing to someone else's dance music. I've always been very clear. I think we have a clear sense of what we need to do.
That was part of the conversation that he had on the circuit with Emily Chang. He was talking about Microsoft, but OpenAI has been pretty noisy as well, didn't reveal its own search. Let's bring in Bloomberg's Jackie Davelos, zero in on Google I/O. And Jackie, what are you looking out for?
Well, there's a few things, and as Sundar Pichai mentioned, the dancing music, it's pretty hard to ignore, especially with an announcement like that coming out of OpenAI yesterday. It's really raising the bar for Google. One of the things that will be keenly focused on is, of course, its updates to its current flagship Gemini model. We're expecting a few more details on just how that model will be interspersed throughout its most ubiquitous products. Think Gmail, Maps, and especially, like you mentioned, Ed, search. It's been experimenting with some features, but hasn't rolled anything out really broadly yet. We'll get some more color there. And of course, this isn't just about software. We're expecting some updates on its hardware line, its tablets, its smartphones, and of course, any updates to its Android 15 operating system.
I mean, the context with all of this is that they seem to be behind the curve, even though for many, generative AI was only made possible because of the research done by Google. But then they managed to rush out certain products. There was a lot of concern around the image generation, in particular with Gemini. How are we seeing them try to right-size the perception?
Well, you said it perfectly, Caroline. They were early pioneers. They have some of the best and brightest talent in artificial intelligence. But where they really fell behind is really kind of creating this bigger generative AI ecosystem that is embedded across its products. It has an advantage in search, as we all know, but we've seen Microsoft and OpenAI really kind of make its way into products much quicker and really commercialize that technology in a much more broader way. And so today, we're really going to be looking to learn how exactly is this flowing through across the business, not just kind of one-off features here and there. It's also unveiling a new open source, it's a smaller model called Gemma. So it's looking to really kind of catch up and offer a more kind of broad array of models, just as we've seen OpenAI do as well.
Jackie, really quick, I don't want to put you on the spot, but what, of all the announcements, what's the one piece of AI technology you're actually using right now at home?
Personally, I love how it, in Google Docs, it makes my meeting templates. I don't really have to worry about kind of doing all the drudgery there. I don't use it quite yet for work, but it's kind of if I need to write up a quick note, half the template is already there. It's predictive, so it kind of knows what I'm looking to write, and it takes some of that boring aspect out of my work there.
I love that. Jackie Davlos. P.S. I'm agnostic. Don't use it. Use all of the above and many, but
others
really,
are available.
Yeah, absolutely love how you're giving us the nuance of how you're using it in real day life. Thank you very much indeed, Jackie Davlos. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Let's get a quick check on the markets. And this is kind of where we stand in the moment. We are basically treading water when it comes to the NASDAQ 100. There are as equal number of names in the green as there are in the red. And then we look at the Golden Dragon China Index. This is basically the US listed shares of China's biggest technology companies. You have the earnings story, which we're about to touch on, and then you have the impact of Biden administration tariffs on the automotive sector in China. Those are some US listed names that also are impacted. In terms of the specifics, spent a lot of the morning looking at Alibaba and Tencent. The stories are really clear. Alibaba, pretty sluggish single-digit growth on its core e-commerce business and its cloud unit. Cloud adoption slow in China. But AI is there. And then Tencent, great strength in video advertising, great strength in the WeChat user base in terms of the number of hours that are going on. So one stock going lower in the US and another stock going higher. Let's wrap it all up and bring in Bloomberg's Henry Wren and Isabel Lee. And Isabel, I'll start with you. I think that's the summary, right, when it comes to this earnings and what I outlined. But start with Alibaba and what they said.
So this is really the tale of two cities. We have Tencent reporting a better than projected 62% surge in earnings, but Alibaba's profit plunged. And the fact that the two biggest internet behemoths in China reported on the same day is a rarity, and the fact that they did just really highlighted the tale of two fortunes for both. And yes, both reported better than expected single-digit revenue growth, but it's the profit performance where they diverge. And investors are really closely looking at the bottom line of these two companies because they're both really seen as a barometer of Chinese health, especially as China recovers from this rocky COVID recovery. And of course, we have also that years-long big tech crackdown. And get this, neither company offered investors strong reassurances of the plight of Chinese economy moving forward. So that's something investors are hanging on.
We love how you give us the macro context. It's about, Henry, let's go micro with you. And let's go optimistic first. Why was Tencent really managing to pull it out for the investor base today?
Yeah, Tencent's profitability really shines out in today's results. So basically, the video streaming is a huge positive, but also in the meantime, the company is cutting hugely on costs. Remember, the company is booking a revenue growth of 6% in the quarter, but its cost of revenue is actually down 8% from a year ago. And the key to that is lower content costs, as well as lower costs associated with cloud projects deployment. But also in the meantime, the company is cutting down other costs, for example, employee benefits, share-based compensation, and that really stands out. A key worry for Tencent in recent quarters has been its domestic gaming business, but it's also showing some signs of green shoots as well. The company say 2 of its flagship games actually received positive gross receipt growth in March, so that's a positive signal taken away from investors too.
No, I was interested in that on the gaming side, because they were talking about how, like, rather than have some big standalone organic title, they would have the kind of games coming where you can update them regularly. Both companies, or executives on both sides, Henry, also had some basically fighting talk, saying that they were each the best at AI. Did we learn anything new about either company's AI strategy?
Yes, indeed. For Alibaba, for example, it's pretty confident that AI will drive growth in its cloud business. The company said with its AI models gaining steam in China, it's confident that it will turbocharge cloud units growth. Remember, it's still pretty tepid growth in this quarter, 3% of revenue growth, but it says it's confident that in the second half of fiscal 25, it can actually return back to double-digit growth for its cloud unit, which should be a good news because cloud unit has always been seen as a growth driver for Alibaba. And for the other side of Tencent, it's actually already bearing fruit. Remember that we mentioned about the strong advertising momentum for Tencent's video streaming business. Remember that the company is actually already deploying many of its AI algorithms in recommending videos for its users. So it has already been seeing some of the early signs of benefits.
Isabel, push us forward a little bit here, because you're giving us the sort of context of the consumer as well. We've got JD.com coming later in the week. I mean, they aren't the only company, Baidu as well. Are we going to get any clarity on just how resilient a Chinese consumer is right now?
I think we will, because Chinese consumers still remain really cautious. I mean, they're dealing with a property meltdown. They're dealing with persistent youth employment. And the Chinese economy is still slipping deeper and deeper into deflation. But to your point, it is a big month for Chinese companies. We have Baidu, JD.com, Xiaomi, NetEase, and Chinese tech companies actually surprised to the upside for the last 8 quarters. So this is kind of good news. It means that, recovery is there slowly but surely. But the money managers have been talking to look at China 2 ways. It's either too cheap, that's why they want to go in, or it's too cheap for a reason. So there are really diverging views among them, but I think this is really going to be a big tell moving forward this month.
Isabel Lee, we brace ourselves for the further earnings to come. Henry Wren, great wrap up on the micro of all that we've just digested. Meanwhile, let's turn our attention to Washington and US-China relationships from a geopolitical perspective now. President Biden hiking those tariffs, as we expected, on a wide range of Chinese imports, including semiconductors, batteries, solar cells, critical minerals. For more, let's bring in Bloomberg's Kaylee Lyons in Washington. A trend started by Trump, continued by the current administration, but there is nuance to how they're doing this, Kaylee.
There is, Caroline. Largely, the Trump-era tariffs have remained intact under this administration. And in fact, no tariffs are actually being reduced today. There are just some new ones being implemented and others being raised. All said, this will affect about $18 billion of Chinese imports into the U.S. All of this will take effect between this year and 2025. As you say, a number of key industries are in focus here. Semiconductors will see the tariff rate go from 25% to 50% by 2025. That's aimed specifically at so-called legacy chips. You'll also see critical mineral tariffs, a new tariff of 25% this year. That is one area in which this could actually be more disruptive than just symbolic, considering the U.S. is still largely dependent on China for things like critical minerals. Then others we saw forecasts, including solar cells and batteries, specifically lithium-ion batteries. We'll see that tariff rate go higher. It's going to jump to about 25%. Solar cell tariffs will jump from 25% to 50%. And then the big quadrupling is in Chinese-made electric vehicles. That goes all the way up to 102.5%. But that is one area in which largely it is symbolic, as because of existing tariffs on Chinese EVs, already they weren't really looking at the U.S. Consumer market to get that demand. What this really is about, though, is making sure that no further supply necessarily could come dumping into the U.S., given the concerns the administration has about Chinese overcapacity. They really, with these tariffs, are trying to aim at shoring up U.S. production in these critical areas, and we'll see what effect this may have in return on the U.S. if there's any retaliatory moves that could potentially come to China, which said today it's resolutely opposed to these new measures.
We discussed on the show yesterday, and I checked, there are just 4 China-made EVs you can buy in this country. So as you point out, it's like more of a deterrent for more models to come. There's a balancing act here so that everyone doesn't get hurt. Anne-Marie Horden, Bloomberg's Anne-Marie, spoke to the Treasury Secretary. And I think we're getting a sense here of that there is a clear message from the administration, but they're basically saying we're just being fair with what China's doing.
Yeah, essentially they want to make sure that the U.S. is competitive, noting that China has some uncompetitive or unfair practices, including with things like subsidies. This is something that we heard the Treasury Secretary talking about. However, when Anne-Marie asked her yesterday if the U.S. is looking for another outright trade war with China, the Treasury Secretary didn't seem to want to confirm that, because they are trying to walk this very delicate line here where they don't want to have blowback on U.S. consumers. That is perhaps why, as well, you are seeing this more calibrated targeting of certain areas coming from the Biden administration in this Section 301 review, rather than something like the blanket 60% tariffs that Donald Trump says he would look to do on all Chinese imports in a second administration should he win the White House in November, because there is a concern as well about the inflationary effect that this could have here at home. Obviously, while you would like to say that this hurts China, it's costs that are paid by importers that could then get passed on to the end consumer, could result in higher costs for the American people at a time when this administration is not only struggling geopolitically to navigate its relationship with China and make sure it's competitive but still cooperative, but also here at home, as they're seeking re-election, really struggling with an economy and an inflation outlook that many Americans are unhappy with.
Bloomberg's Katie Lyons out of Washington, D.C. Thank you very much. All right, coming up on Bloomberg Technology, we're going to be joined by Kraft co-founder and partner David Sachs on a brand new AI communication tool and company that he's leading. That conversation coming up. Stay with us because we'll be right back. This is Bloomberg Technology. A work chat for the AI era. It's called Glue, and it's a new AI native communication platform going public, coming out of stealth today after 6 months of private beta. The founders say Glue takes the best of both worlds, from ChatGPT and Slack, and that it was built for the way people now collaborate, both with colleagues and with their AI assistants. Let's bring in Kraft partner and Glue co-founder and chairman. Delighted to say that David Sachs is with us here on Bloomberg Technology. David, if it's okay, I actually just want to start with the technology itself. Glue's built to support both GPT-4 and Claude 3, and I just wondered if you talk us through the approach you took in building it.
Right. Well, we want to be LLM agnostic. We want to work with really all the major LLM models, and we're starting with ChatGPT and we're starting with Claude. And by the way, we're using the latest version of ChatGPT, ChatGPT 4 Omni that they just launched yesterday, and it is pretty awesome. The performance is terrific. But stepping back a second, what we're trying to do with Glue AI is create the first AI native chat app. And what it does is it creates one place where you can have your chats with AI and your chats with humans, with your team, because we think employees want to do that in one place instead of going to 2 separate apps. The problem with ChatGPT, as awesome as it is that it's not a multiplayer experience. There's no way to bring your coworkers into the chat with you. And the problem with Slack is really that the channels get in the way, and we hear from lots of teams that they have channel fatigue. and really want this new threaded conversation model without all the channels. So that's what we've done with Glue.
David, we know you as a venture capitalist, right? A long-time investor in technology companies. What was the need that you identified, or the gap in the marketplace that you wanted to start and build a company yourself and the tool, rather than back, I guess, or invest in another player?
Well, before becoming an investor and before becoming a podcaster, I actually was an internet product guy. I was the head of product at PayPal. And then I created a company called Yammer back in 2008, which was the first, or one of the first, enterprise messaging platforms. And back then, it was based on the idea of feeds, which, thanks to social networking, were kind of the conversation paradigm. Then, the next decade, we had Slack, which was based on IRC and channels. And now we have a new conversation paradigm that's based on AI. It's based on ChatGPT. I think every decade you get a new paradigm like this, and you need a new communication tool. And that's what we've built with Glue. I just didn't see that tool on the marketplace that was reacting fast enough to this disruption. And so I partnered with Evan Owen, who's my co-founder and CEO, in order to create Glue.
Now, David, I know that you like to start your pitches with a demo. So let's demo it a little bit. I want to look at how it looks, it feels, and how it's going to interact. And as the founder, as well as putting the money into this, are you not worried about, the competition that's out there? Because everyone's getting into enterprise generative AI.
Yeah, for sure. I mean, right now, every enterprise SaaS app is trying to figure out how to incorporate AI into their product roadmap. There's no question about that. But I think there's still a pretty big debate about where AI is going to live in the enterprise. Where are you going to go to ask those sort of broad-based questions about, for example, who in your enterprise has the right expertise, who should be talking to, those sort of core enterprise collaboration use cases. And our view on it is that AI should live in the chat, because again, you don't want to have one application for your AI chats and one application for human chats. It all belongs together. And the AI, what we found is that when you do incorporate the AI as a full-fledged participant into the chat, it's able to use all of the live chat history as context. And so your work chat app is able to give you answers that regular ChatGPT could not. We've had really staggering results at Craft Ventures using this product internally. I've asked the AI to write investment memos for me, summarize the arguments for and against investing in a company. It's done an unbelievable job just assembling those arguments based on the chat history. I've asked it who is contributing the most to deal flow at Craft, and the AI is able to tell me. It's really amazing the answers you can get when you give AI access to your chat history.
Amazing answers built by, in many ways, amazing large language models that underpin it. I'm interested in you having sold Yammer to Microsoft previously, having understood the way that M&A works, and a company that looks for exits is now seeing all these interesting partnerships, shall we call them, being done, whether it's acqui-hires, whether it is OpenAI teaming with Microsoft, Anthropic, of course, going in with Amazon and Google at the same time. How do you judge that as a VC?
Well, there's innovation happening at every level of the stack. I mean, you're seeing tremendous innovation at the foundation model layer. You've got OpenAI, you've got Anthropic, like you've mentioned, you've got AI now launching that we just invested in. And then you've got innovation happening at the application layer of the stack, where applications are able to take advantage of all the new capabilities created by these LLMs. And if you're positioned correctly in the application layer, you don't want to compete against the models. You want to harness them so that as the models get better and better, your application gets better and better. And that's what we've seen with Glue, is that with each new release of ChatGPT or these other models that we've incorporated like Claude, the Glue chat tool just gets better and better. So we're going to ride that wave as the underlying model innovation continues and the models get better and better. The features of our application will get better and better. And that's how you want to position yourself.
Sorry to interrupt you. David, you had Sam Altman on the All In pod last week. And I think on social media there was some debate which you participated in about whether he'd said anything new. but go to yesterday's presentation from OpenAI. How much of it then surprised you based on the conversation you'd had last week?
Well, in retrospect, he gave us a bunch of hints last week. So I was being a little bit uncharitable, but really I wasn't criticizing Sam. I was just trying to ratio Jason. But yeah, no, Sam gave us a bunch of hints last week that now make a lot more sense in the light of ChatGPT-O yesterday, which really was an impressive demo. And like I said, we've already incorporated it into Glue, and I can tell you the performance of it is way better than GPT-4 Turbo. So kudos to the OpenAI team. They've really done a great job with that.
David, quick question. Just thinking about Kraft's portfolio, did you try to get into the XAI round?
Yeah, we did. We've participated in that.
And from a follow, will you integrate XAI into Glue? And how are you thinking about whether winner takes all or whether there will be, of course, well, a commoditized version of large language models here?
Yeah, I mean, I expect that we'll integrate with all the major LLMs. Our view on it is that we're LLM agnostic. We want to give our users the choice of which LLM to use. And in fact, we're going to plug into all the major LLMs, and then we can actually make the choice for them in terms of which model to use based on the query that they're trying to ask. So we actually think that the more models, the better.
Do you think XAI could have got a large valuation?
I'm going to let them announce their own round. I don't want to announce their round for them, but if the question is whether we participated, we did.
David, look, it's an election year, a presidential election year. You talked about your background in technology and being a tech investor, and you've been vocal on the political front. Will you be more active this year in this election cycle?
Well, we talk about politics as one of the topics on the All In pod. We discuss current events, business, markets, politics, foreign policy events all over the world. And so obviously the election is unavoidable. And it's no secret that I've been a critic of Biden. So I may get more involved in the sense of maybe hosting events, maybe contributing, but it's really, it's not. It's certainly not the main thing I do. Let's just put it that way. It's the way that you get involved in the political process is that you typically host events and you get to maybe meet the candidates that way. And that's something we've tried to do. Me and my co-host in the All In Pod, we've done that now for Robert F. Kennedy Jr. We did that for Vivek Ramaswamy. We had him on the pod, and then we did events for them. And we've extended an offer to the other major candidates and hope that they accept.
Well, it's not the only thing you do. It's on top of the pod, it's on top of the investing, and on top of founding new businesses as well. Come back, tell us how it's going. David Sachs, Kraft partner and Glue chairman. We thank you. Let's get to the return and the meme stocks. GameStop, AMC surging. That retail frenzy, or is it a retail frenzy that's actually driving this? Whatever it's happened, it was Roaring Kitty that seems to have revived the animal spirits. Bloomberg's Bailey Lipschultz joins us for more. Another 66% higher on the day. I'm not going to ask you about fundamentals of the business or the business model of selling real games in retail stores, but who is buying, who is driving this higher?
It seems like this is fingerprints of Wall Street. When we're looking at some of the flow data across Fidelity, Interactive Brokers, and some of the other ways that we track what retail is buying in as real time as possible, it doesn't seem like they're actually buying GameStop. It seems like on the whole, net sales across Fidelity's platform for GameStop outpacing those to buy in GameStop, though they do seem to be buying a bit more AMC relative to those sell orders, but there's a lot to try to make of some of the trends that we've been seeing. Again, GameStop has a shot at getting back to those all-time highs. AMC is still down like 97% from those records.
Bailey, do we have any more clarity on that social media post by Roaring Kitty? Yes or no?
No. He's added more to it. He's posted again today. I have no idea, Ed, what the logic is. I've DM'd him. Roaring Kitty, if you're watching this, please DM me back. But no one knows anything. And there's so much uncertainty around what he's doing and what it could mean.
I mean, he's going bonkers. It was initially lifting one of GameStop's own posts back in February, but now it's just video after video. Go check it out. Bailey Lipschultz. Here's across all of it. Meanwhile, that does it for this edition of Bloomberg Technology. Ed, it was a busy one.
Check out our podcast, Our Pod. You can find the pod on Apple, Spotify, iHeart, and the Bloomberg platforms. We love the pod. From San Francisco and New York, this is Bloomberg Technology.